So this is an update on ASML. It had a moment yesterday. They released the earnings in the middle of the day, and the earnings themselves were not bad at all. They were just disappointing to the people expecting whatever they expected. Solid company, decent financials. It's a buy the dip moment. Let's look at levels. A few things. One could argue that they lost 860, 850. I did a video on it before. In fact, I have lines that kind of forecast all of this. If you follow this white line, very thin line here, I'll make it larger to see that this path was forecasted a while back. Zigzag, and once you lose the 850 zone, this would be the target, and we hit target 1 of 2. Having lost 850 brings a potential downside of 250 from there, so one would argue that we can go to 600. But in between, there are a bunch of support zones, one of which is where we are. Below 700, which is what it's inching into today on 1016, it becomes a little iffy because of these candles right here. And they've been sloppy on the way down and on the way up, which leaves a hole in volume. So I'm thinking that rallies will fade and they will try to make a lower low. So as much as I want to catch this falling knife, I should recognize that I shouldn't just buy calls. I would much prefer to engage with shares, only a partial position, or sold put spreads, or sold put for somebody that has that kind of account that they want to buy at least 100 shares at a time. Maybe a combination of selling puts or put spreads, buying a call, spread, and a diagonal.